There's a lot of people from Vegas.
My man?
What's good?
Dude, man. Dude, I've been watching y'all's podcast, bro. Salute, bro.
Thank you.
Dude, I look
forward. Where do you think I started from?
Got my little notification on, Sam, and it is exciting.
So, where do you think I started from, TJ?
Wait, hold on 1 second. I need to get him over. Yeah.
Dude, TJ's in trouble.
What's going on, man?
Doggy duty, baby. Doggy duty.
You started talking about the Confluent mishap, and then you got in trouble again.
Look at that. She was like, "Is that
that was really unfortunate."
Yeah.
So what have you been up to, brother? How's the portfolio holding up?
It's doing good. A little bit less wheeling, and I'm not attributing that to anything. But I mean, the wheeling and the hustle takes a little bit of time. So I had to divert my attention to work. And, obviously what I'm doing right now. So I got to be honest, the wheeling is good. It is profitable. The only thing is that it's a job. Like, it's not like something you can just do like part-time. Like, you need to keep track of it, the spreadsheets and everything you have. Like, it's not easy. And I couldn't handle it. Like, it was too much. Yeah. It was too much. Figure out the calculations and everything, even the spreadsheet. And it was just like, well, it's hard when you think of the opportunity cost and everything, and but at the same time, like, Confluence did end up working out, but like we're right back to where exactly we were before. So sometimes it's I thank you for mentioning that, like, okay, if you stayed, you would have won, but then what about the opportunity cost? If you stayed in Confluent, then you wouldn't be able to get in other stuff that you could potentially got in. So like that's the tough part with the whole market these days, is that you got to kind of figure out like where the opportunity cost with everything, what is the best thing for you as far as conviction goes you could possibly stay in. So yeah,
I think the lesson that I was trying to teach with that, Sam, is whenever I look to get into a position, oftentimes we're prisoners of the price movement.
Yeah,
like right here, right now. So it's like, I like it right here, right now. And then I had a mentor tell me the other day, before you get into a position, ask yourself, are you going to like it if it's 50% drawdown? Like, how do you feel about it? How do you feel about it if you buy it right here and it crashes 50%? Are you still going to be excited about it to like really scoop up more? If the answer is no, then maybe you don't need to be trying to get into it, period. Because you only like it if it goes up from here. And that's my mindset that I used to have probably till about a year and a half ago, that I thought that, well, I'm already getting it out of drawdown because I was usually looking for a stock that had already kind of plummeted a little bit.
Yeah.
But dude, these things will go they'll go a lot lower than you think. You know what I mean?
Of course.
Just like they go a lot higher than you think, and I get caught with covered calls all the time.
And that's where the conviction really comes in. Like, if something drops like 50%, is your conviction still there, or is it a price action that's getting to you? And I'll be completely honest, like when it comes to Confluent, I really thought that, it was going to continue to accelerate, and it did accelerate. It was like nearly 40% growth. The margins were expanding. And then now in the latest quarter, it's like, now margins are contracting, their growth is decelerating, and they're still free cash flow negative, and they're still not profitable. So it kind of makes you think, like, in this AI era where like everything is like all about artificial intelligence, and especially when it comes to Confluent, you're thinking about the data streaming that's coming in real time and being able to process that. Wheeling is no job. Yeah, of course it is, Douglas. But it's pretty hard to stay in a company when, like, in this type of bull market we're in, and it's not able to gain customers at the same rate it had been like 6 months ago. It kind of makes you think, like, is it losing its moat? And I did look into Confluent. I did like look into the research of like how AWS is doing in terms of their product, because Confluent is Kafka is an open source product, and Confluent does leverage that open source product and then make it their own by utilizing the clouds of Google, AWS, and Azure, and being able to put it there so that way their main go-to is like, we can save you money as far as the egress cost goes, and we did customize the platform. But then when you really think about it, when I did look at the last earnings, it was like, well, if that's the case, then how come the growth is slowing down and you guys still are not free cash flow positive? And the market hates that shit. So, being that I did take a lot of profits when it was like above 30, it was like actually 34, 35, and I took a lot of profits, and I was not wheeling it at that point. At that point, I was taking a lot of profits and just chilling on it. It was like pulling back to nearly 50% to where it is right now.
Right.
And when I look at it now, and that's the reason why I came in the stream, is like, sometimes you just got to cut your losses. And I know you're thinking about this with Intel. It's like sometimes you're just wrong, and it's okay to be wrong, but it's bad when you don't admit you're wrong when you are wrong. That's when it becomes terrible.
Yeah.
So maybe I'm wrong with Confluent. Maybe I'm not, but I've really been thinking about that a lot lately.
Yeah, like I have a situation where I paid about $7 more than I would like to on Intel, but then it's like I have more experience under my belt now, right? So you learn from past experiences. That's what life is in general. And now I'm like, okay, well, I could free up a couple $100,000 just by turning this into long calls. And then I can go have that money resurrected somewhere else. And either these long calls print or they don't. I can sell covered calls against those long calls. It's a lot easier I'm going to get the same premium anyway. So it doesn't make any sense to own the shares, especially the dividends going away, etc. So it's like I'm just able to navigate these rougher waters with a much clearer mind. And I don't feel like, oh shit, I gotta go on YouTube and admit I was wrong. I was like, okay, I got my ass kicked here, but this is how I'm navigating out of it because I don't want that extra $250,000 sitting there as dead money.
Yeah.
Just because I lost money here doesn't mean I have to win the money back over here. But I'm just saying those things. I don't know that I was mature enough to really, or I wasn't mature enough in my investing even 2 years ago. So I think that we're always growing as people and growing as investors in this craft.
The thing about Intel is that, their main thing is that, the reason why you probably got into it was probably because of the fact that they could possibly compete with the foundry business of manufacturing chips locally in the U.S. And they're actually getting subsidies from the government. So it does have that edge over TSM, but TSM is building that factory in Arizona. And at the same time, TSM's been doing this for decades. Right. Intel is just, they've been in it. They've been in IDM for a long time. They've been building their own chips and so on. But as far as getting in the GPU market, that is something that it's like, they're kind of new to it. So even if they do get into it, they're still going to be years or even a decade behind TSM. Like they might need time to catch up. But they do have that advantage of being a US-based company. So it's kind of hard to evaluate that. At the same time, Intel does have that really good book value where like they have so many assets and they don't have that much debt, but they have enough where it's like nearly the same amount as a market cap. Mm-hmm. But at the same time, it's like, what is a market thing? If the market fucking hates Intel, it's like, what are you gonna do? Like you could be sitting on a gold mine like SoFi. Like you'd be sitting on a stock where it's like, why is this price so low? But the market sees it a certain way and it is not going to give it its premium. And then on the contrary, you can look at Palantir and be like, everyone knows Palantir is overvalued. It is no secret. Palantir is trading at 20 times price to sale at the very least, but it is still continuing to go up. And the thing is that the market fucking loves it. There's nothing you can do about it. And the premiums are juiced up. So you can just continue, rolling that stuff. But at the same time, that's the problem that we come into. Google is trading at 17 times forward price to earnings. But the market hates it, right? And even I saw today, I was like, well, Google should really be up like 2% today, right? Because the NASDAQ was up like 2%, but it's not. It was up 1% today. And I hate to be like a short-term person, but if the market hates a stock, they will continue to hate a stock no matter what, and that does not even matter. If there's opportunity cost on the table, then that's what you need to evaluate as a short-term trader.
Yeah, market sentiment's a real thing, dude. It's one of the M's that I evaluate. It's one of the M's that I evaluate whenever I get in. Excuse me, I got to plug in my mouse real quickly. Apparently,
guys, I'm gonna head out. I got a doctor's appointment early in the morning.
You don't plug it in, or so I don't know how to navigate anything. So we're gonna stay right here for a bit.
Just follow you on Twitter,
TJ.
Man.
Well done.
Nice to meet you.
Right on. Likewise, Sam. Same thing. Bill, TJ, everyone in the comments. Thank you. See you guys later.
Later, man.
Hey, buddy.
Are we good?
So, why is Bill White not in a Jeep?
There we go. Can you guys hear me?
Did you get rid of the Jeep, Bill?
I don't live in my Jeep, man.
What? I thought the Jeep was your home.
You would only see me in the Jeep during the day when I wasn't working.
I thought it was a CFO that lives in a Jeep. I don't know. Yeah, man.
Anyway, Sam, earlier we were talking about what to do with the Bitcoin hodl because it's at about 11 or 12 grand now, and I think lifetime earnings on the channel are about approaching 6,000 or so.
Yeah.
So we're either talking about, maybe people want to get like their portion of the money now, or they want to like stick it out, or maybe we could like put all the money, put the money into like some merch, maybe do a meetup or whatever. So right now, I think we're leaning into doing like 3 meetups. So do one in Vegas, or what was it? San Diego, New York, and Miami. Those are the 3 places that we're looking at doing some meetups.
Damn. Well, if you're gonna do Miami, you got to wait until at least like November when the hurricane season's over. New York is great now because it's September and fall time, so it's great. But once winter comes rolling around, like I hate New York during the winter time. Vegas is always good. I was just at Vegas last weekend, and with kids, Vegas is still just as fun.
Yeah. We were in Vegas. We were in Vegas this weekend.
Yeah. Wait, last weekend?
Yeah, like we just got back on Monday.
Oh shoot! What did you do in Vegas?
Yeah, we were celebrating my buddy Roland's birthday. We were staying at what was it called, the Palazzo, right next to Venetian.
Yeah. Oh, that's cool, dude. I was there, but I was in like the cheap hotels in the South Strip. I'm not balling like you, man. I was in the cheap shit.
Dude, I had no idea you were there, dude. We could have totally grabbed lunch, bro.
I wish I knew. I wish I knew. But yeah, no, I was in a quick trip to Vegas real quick. It was very last minute. So
we were there for like 4 days, bro, and I didn't get to play. What's going on, Dougie Dallas? I didn't get to.
How's it going, guys?
Well, man, I didn't get to play as much poker as I would have liked, but it wasn't that kind of trip because
it's so hard to play poker in Vegas nowadays. Like there's so many pros.
My wife wanted to try out these restaurants, so she like had a list, and I hadn't had steak in I don't know, probably like 6 months or so. Dude, I ate probably what was the equivalent of like 2 or 3 filet mignons while I was there. Because I'm not a real big steak person. But dude, this
are you still on Ozempic?
We were good, bro. It was with what was the place called? Cut by Wolfgang something.
Wolfgang Puck.
Good, bro. That shit was so good, dude. That was so good. And we went to
Isn't that in Planet Hollywood?
No, that was in where we were staying at the Palazzo.
Oh,
or the Venetian. Because I can't. I mean, it's like it's the same hotel. It feels like, you just like all of a sudden you go from one part of Venice to the other, right? And then we ate at a place called Delilah's. Bro, that place was so good. That was at the Wynn, I think.
While you were enjoying your 5-star meals, I was eating at freaking Denny's and like Panda Express, dude. I'm cheap as fuck.
Real Vegas experience.
So cheap, man. So
real
cheap.
Vegas
I'm spending on gambling and alcohol. Yeah.
Hey, don't they give you free alcohol if you're gambling? You just gotta like tip the waitress. Is that how that works or no?
Yeah. So I play at the craps table usually, and like I'm just playing like the minimum. So it's like I'm not gonna lie, Vegas has gotten pretty cheap lately because usually the tables are minimum on the strip. They're usually minimum like $25, like minimum, right? But like this last weekend they were $15. I'm like, what the hell is happening here? It's like short Las Vegas Sands, short all that shit because this is the cheapest thing I've ever seen in Vegas.
Yeah.
And to be honest, like I probably lost like $100, but I definitely got more than $100 worth of drinks. That's for sure. So that's a win in my book.
Oh yeah. How are you doing this evening, Dougie Dallas? I saw that you're scooping up another laundromat.
Yeah, well, I got to find some financing for this one.
We lose?
I don't want to lose one all cash, man.
No, he's here.
Okay.
Yeah, can you hear me?
So how's it going with Chris Patel? He had messaged me that we're gonna do some sort of a challenge for like $5,000, and then I never heard back from him.
Oh well, that's probably because you already lost. I'm just kidding around. No. I mean, I don't know. That guy's busy. I mean, Dougie, we can hear. I can hear you.
Dougie, I
Dougie.
can hear you. Yeah.
Okay. Yeah. How's it going, Dougie?
Oh, not too bad.
Hey,
Danielle said I moved in with Steve and Amit. No, I'm only here while Amit is out of town.
okay.
I'm just crashing at his house.
Amit's washing Alex Carp's clothes for AIP Quan tomorrow, right?
He should be doing it at my laundromat.
So what's going on? You're scooping up another laundromat? Is that what I saw in the chat?
Yeah, I found another one I want. I just need to find some financing for it. I bought my first one all cash, and I don't want to do that again.
Bro, other people's money, other people's efforts, other people's ideas.
Exactly.
So what is it? Pitch me.
Well, the asking price is about $350, and they're cash flowing like 113 a year right now. So that's after expenses. That's pretty good. That's like I think it's like a 2.45 multiple is what it came out to be.
And is it a one-man show? Is it a two-man show? Like
they say they've got 2 employees right now. So
how many machines is that? Like that's a lot of coins, right?
Yeah, it is. Where did I have the deal pulled up? They've got 80 washers. So if they got 80 washers, they probably got 60 dryers.
Wow.
And the great thing is they've kept records, which is awesome. So you can actually do due diligence on it, because it's real hard to find a laundromat where it wasn't just a sole proprietorship and they just mixed all their business money in with their personal money, and you don't know what money came from where. So
are you Doug
the
from
only laundromat that wasn't washing money?
I'm not washing money, man.
No, not you.
Making it.
Are you Doug from the Wheelers Nation Discord?
Not from Wheelers.
No, that's Doug B, I think.
Okay. I thought you were the Doug. I was like, damn.
No, I'm in Chris's corner, but same name.
Oh, yeah, Chris's corner? Oh, okay. Maybe I saw you on there. All right, cool.
Yeah, inner circle, bro. Inner circle, bro.
I know. I manage that one, so I know that one.
That is awesome. I appreciate the 464 people rocking with us. And
so anyway, so if you're asking, I mean, if you want to know about the laundromat, like we can break that down sometime if you want to.
Yeah, no, for sure.
It pays cash every week. Every week it pays cash.
Yeah, business with cash flow is a good business to consider. Yeah, I'm just looking at diversification because I want to have other ways to generate money so that I can go longer without having to start withdrawing from the portfolios, because then it's just so much easier to get to your next double. You know what I mean?
Yep.
And then it's also like it gives you energy because it's like you got something else going on, as long as it doesn't take up a lot of time, because I am trying to like learn more about the companies that I'm in. Like I feel like this is I just wrapped up this mentorship on being a hedge fund manager, and essentially my big takeaway from this whole thing was you should feel confident enough about really big investments that it's like you feel like you're qualified to be the CEO and the CFO. So you should know these numbers backwards, forwards, left, and right. You should know the vision of the company. It's almost like if it's your own. If you're talking about turning it into a $250,000 business or an investment, right? Because it's like, are you going to go start a $250,000 business and not know anything about it, but yet you invest in that business and not know much about it, the same amount of money? So it just kind of tweaked my perspective a little bit, because I don't know like the Palantir numbers the way that Amit does. I don't know the SoFi numbers the way the SoFi geeks do and all that stuff, because I'm like, well, I know how to make more money with those companies than they do. And that's always been my justification for not learning the numbers, because I mean, the numbers change anyway, right? So, but it's just about just being on top of your investment and minding your business, minding your portfolio. Bill, you're a numbers guy as a CFO by trade. What do you think about that philosophy that they spent the last 6 weeks shoving down my throat?
who spent what happened?
Doing this hedge fund mentorship, like a class, like a school that I was part of, and they were like, with the size of the positions in the portfolio, that I should essentially feel like I could be the CEO or the CFO of these companies. Like I need to know them in greater detail, like know what you own, right? Very Peter Lynch or whatever. And I'm like, well, I know how to make money with them. Isn't that the object of the game? And I got a lot of pushback from it, but I understood where they were coming from. But at the same time, well, dude, I don't want to like do paralysis analysis, because at the end of the day, regardless of how much you know or you don't know about the fucking company, you're not going to influence whether or not it goes up or down. Like that's just the reality of it. So I have spent the majority of my career learning how to manage my emotions and manage my positions.
I think there's a middle ground to the two. So you don't want to be studying the numbers to the point that I've seen other people on YouTube study, but I mean, they like doing it. And if they're going to do it and I can watch their shows and get the data from it,
Save time.
yeah. But there is something to say about understanding the numbers and what the impacts of that would be. Because I remember at one point you were trying to learn more about DCFs, and I put together one for you about Palantir.
Yeah, I have it right here on my screen on my.
And I was trying to explain to you, I'm like, what everyone's missing is that you don't need to get to the 30% growth, like a CAGR.
Right.
You know, where they're really going to pick up steam is in their margin expansion. And all of these expenses as a percent of revenue are going to decrease drastically. And you're going to see the cash flow of that company just go through the roof. So in my DCF, I don't need to thread the needle on something like that. I can just say, I think they're going to do at a minimum 18 to 20%. And if they do anything more than that, that's just going to be better than what I projected. So if you could really understand even just how the numbers work in unison and like what their expenses are and why they might decrease as a percent of revenue, things like that are pretty important in putting together something like a DCF. And maybe if you really fully understood that at the time, you would have even went heavier in Palantir. I don't know, maybe not. But I know at the time you thought it was a little bit overvalued. And I was saying it's not.
Yeah.
I personally believe right now maybe it does a little bit, but it's probably going to grow into that. I don't know where it ends, but at the time that we were talking, it was at 16, 14 to 15, 16 bucks.
Yeah.
So maybe that would have helped you at the time.
Well, I think what the game changer for me with Palantir has been, they learned how to sell their shit.
Yep.
Because you see, Palantir never had a software problem. They never had a problem, product problem. They never really had a real big market sentiment problem, in my opinion. What they had is lack of sales. And when I saw the writing on the wall that they were going to figure out what to me should be so easy, because I've been selling my whole life, right? But when they figured it out that if you just put people on the product and let the kind of product demonstrate the value that it has for the company, I was like, dude, they're going to be able to scale the shit out of that thing. So at that point, I was like, I put $100 billion market cap on Palantir in my mind. I was like, I could see it growing into that in the next 3 to 5 years, and it's going to be expensive / overvalued probably the whole way until it levels off, and that's when maybe the growth stops catching up to the valuation, because the market's forward looking. It's going to price in 2 or 3 years, potentially 5 years, sometimes 10, which gets ridiculous, right? And that's kind of what it's doing with Palantir. But at the same time, we've got to be careful, because Palantir is one mediocre earnings report away from dropping 20 or 30% overnight as well. So know what you own and know how it's going to react to good news and mediocre news, right? So I already know that I'm adding my 500 shares a week still, because I have this share goal of 25,000, but I'm probably not going to add past that unless there's a significant pullback, and I just have to live with the results that I wasn't able to grow the position as big as I would have liked, and that's okay. I'm not perfect, but I'm not going to cry about making $500,000 either.
No, right. And I agree with you. They are selling much better now. I think my point at the time was that they didn't even have to, sell as good as I think they're going to do now. So it was more of a thinking about it differently. Like they only had to, everyone was saying they needed 30% to get there, but they don't have 30% now.
Yeah, but I think the market hung on 30%. And Doug, maybe you can help us out. And Sam's very familiar with this industry as well. Alex Karp's the one that said
so.
So I didn't pull
Fundamentals of this
30% out of
company
my
is just
ass.
gone.
Alex Karp said it.
Yeah.
Go ahead, Sam.
Fundamentals with Palantir is gone. Like, there's no more fundamentals anymore. The company is a total meme stock. This thing can just run because now it's got the retail following, it's got the pump up, it's got the excitement. You can't base it on fundamentals anymore. Like, fundamentals are just out of the world now. So if this thing runs to like $50 a share, it can, just based on the sentiment and the position he has right now. It's under position as far as institutional goes. Yes, I know institutional owns like a large percentage of the company, but this thing can run to $50. I'm not saying it's going to, but I'm saying it can. So if you're sitting here waiting for Palantir to be worth $20 a share, which is fair value, it will probably not happen.
Yeah, I agree, and I've been buying it since 20. I showed it the other day. I think I picked up 10,000 shares in the $20 range, and I picked up 2,500 shares or 5,000 shares at or 2,500 shares in the $30 range, and the rest of the shares were over there in that $7, $8, $9 range, which was great. But it's just one of those things that's what's tough about investing is you have this way that you go about trying to do things, but some companies don't lend themselves to your investing style. And I think that's what being a good coach is. Doug, you follow football a little bit, Dougie?
Absolutely. Go Tigers.
Yeah. So you had LSU, I assume. Is that what Go Tigers is? So you had one of the best coaches of all time in football for a while, and Nick Saban. So I think based on what quarterback you have and what personnel you have, that coach is going to coach a little bit differently based on what he has to work with. And I think that as an investor, you need to figure out what's the best way to approach this stock so that I can maximize my return, because not every horse runs the same. Not every stock runs the same. Not every stock trades the same. Like we have fintech, we have a firm and Upstart that, in my opinion, are inferior companies to SoFi because one, are GAAP profitable, the others are not, right? But the market likes them more. So it's like you have to make decisions there.
That's so temporary too. I mean, it's only going to be. I mean, look what happened with Palantir, right? They came out, they were profitable. The first quarter, they were profitable. Everybody started actually clowning them. It was like, you can't do it.
It was
they can't repeat it.
It was a little questionable, though. It was questionable
it was a little questionable because they had sold some stuff to get profitable. And then the second quarter, they kind of did the same thing. But, they were trying to make their company legit because they wanted customers that are going to depend on them for 20, 30 years in the future, specifically think like Department of Defense stuff, right? I mean, if they're trying to get the big dogs, those companies are not going to turn over their entire organization to a little fly-by-night company that could be gone as quickly as my solar installer did. That's why Palantir is in a position now where they actually have to be a little bit more conservative. They have to be more conservative. They have to show a profit. They have to prove that, hey, we are not going to be subject to, if there's a recession, we're going to be laying off a whole bunch of people and we're not going to be able to still service our customers. Because these very large organizations have too much at stake to get that deep with a company that can fall down. I know the company I work for, it's not Matt Money's UDOC, but it's another Houston-based oil and gas pipeline company, and we need Palantir. But the last, I'm on the maintenance and asset integrity side. And the last big technical, get all the smart engineers in the same room from all over the world. group, right? They wanted to do some AI machine learning. So they found some little dinky company in Houston that says that they're AI now, but they were doing blockchain stuff 2 years ago.
Right.
Like they were blockchain experts 2 years ago. Now they're AI experts.
Hey,
Sam
TJ,
probably has seen a few of those.
Bill?
did I ever tell you what first got me interested in Palantir was I worked in the manufacturing industry, and a lot of the problems that I would encounter, and like things that I wanted solutions for that I never really could get solutions for. When I started researching Palantir, I realized that was the solution to a lot of the problems that I had throughout my entire career. And I worked for a company in Dallas, Trinity Industries, and they did a spinoff. So I moved with them. I moved with the spinoff company called Arcosa. But Trinity Industries is actually took on Palantir, and they're going to be presenting on the new AIP Con.
Oh,
And
right on.
and that was my initial. I said, if this company is actually fixing the solutions to all these problems that I've encountered over the course of my career, this is a no-brainer.
Yep.
And, it's funny that it's
look at the Palantir video that they did with Kinder Morgan. It's on their YouTube channel, and I'm like, can we just get that? Like, can we just get that? Like, I don't even need it to be customized for us. I just want that. And they built that in like an hour, or something like that. Like they built it in the video. And Danielle says, she's in it because of healthcare.
Yeah.
The funny thing about healthcare is that I'm seeing across multiple verticals like Workday. Workday's been preaching that healthcare and the public sector have been the biggest ARR customers growing year over year. I do think that any company that's involved with healthcare and public sector will see tremendous growth. That includes Workday, like I just mentioned. It includes Palantir. And when you really think about like the top all-star software companies that are out there, they're really focusing their entire go-to-market team on specific sectors. And I think that if your major customer base is in healthcare, you do very well. I mean, look at freaking UNH. UNH has been up, or United Healthcare, they've been up like 20% in like the last rolling 3 months. It's crazy.
You seen the portfolio?
Sam, let me ask you a question, and give me your honest answer here, because you're a little bit more on the bear side. I mean, I think you said Palantir can run its total meme stock.
I'm not on the bear side, dude. I'm a shareholder.
Okay, so let me ask you a question though, just regarding disassociates from the fundamentals. Some company has to be the highest, most expensive company in the sector, right? Like somebody has to do it, right?
Yeah.
I mean, whether it's Snowflake or Palantir or Databricks or whoever, somebody in SaaS has to be the most expensive. Pick one; it's going to be somebody, right? If Palantir tanks tomorrow, someone else will be the highest. Shouldn't that value be the company that's working on the world's hardest problems, the most important problems in the world?
Yeah, but fundamentals are completely like disconnected from valuation. That is always the case. Otherwise, you're going to be sitting there in 2021 being like, why the fuck is GME priced that it's going to make more money than freaking NVIDIA at this point? Like, it just makes no sense, But like when you think of current valuations are never attached to reality. Because if that was the case, if valuations were always attached to reality, the stock market would not exist because no one would make money because everyone would know. You just look at a freaking balance sheet and you'd be like, okay, well, this is priced in, so like it doesn't even matter. But if you think of like something like Palantir, it's like people aren't buying it because it's like, okay, I see their financials and I see their fundamentals, so this is going to go up. No, this thing is like projected on all of retail. Everyone has dissected everything about this company. So the only thing you're really betting on is that the next person is going to buy it for more than you're going to buy it. And I'm not saying that I'm going to sell my shares. I'm not selling shit. But the thing is that the way Palantir is right now is that they're trading for higher than their historical value that they've always been trading in. And that if they go up any more in their valuation, it is not because of fundamentals. It is literally because of sentiment.
Well, it depends on what you consider a fundamental, though, because I would agree with you.
Existing
Sam,
public information that is there for financials. That's what I mean by fundamentals. Anything beyond that is not a fundamental because that's not public information. It's not.
Yeah.
Like you can't sit there and tell me that they're going to grow more than 24% until you see next quarters. So if you look at the past quarter, 27% year-over-year growth in terms of revenue. Okay, that's great. Like that's phenomenal. And their GAAP profitability is amazing. Like this company's expanding margins and they're growing year-over-year on a crazy percentage for U.S. growth, right? And that's where most of the revenue is coming from as far as growth goes. Okay, so that's great. Like I'm not going to discount that. I own the stock. I'm not discounting that. I'm a Palantir bull. Like I hope it goes up to infinity. But okay, there's a certain point where you look at their existing metrics as far as what they have in their balance sheet, their income statement, their cash flow statement that's publicly available, and you look at it, you're just like, there's no freaking way this thing's going to go up from here. But when you think of sentiment, it could be a different story. And that's the reason why I've never sold covered calls in it still. I haven't sold covered calls yet.
So where I said I was going to agree with you is based on the current public information. Sure, I would agree with you that the fundamentals and any metric that you would look at is overvalued, especially when you're comparing it to other companies in their sector or whatever. I would say that the metrics that people typically talk about based on the past publicly available information in a high growth company is not the right metric to look at. And it's the whole point of, in a growth company, looking at a DCF model and projecting out to the future. And it's going to mean something like everyone's DCF would be something specialized to them and what they feel and their sentiment. And I understand that. But if you put reasonable growth rates into a DCF and you discount your future cash flows to the current day value, you
you already lost
price. You can back into a stock price, right? And so I do this, and I feel it's a little overvalued. Now I'm being conservative with my revenue growth numbers. I feel it's a little overvalued. I'm not like disagreeing. That being said, in a quarter or two, if the growth rate increases, my DCF's wrong and it's undervalued again. So I think you got to be careful on what you're considering the fundamentals, because yes, there's current data based on your quarterly reports that you can look at and look at a price to sales or a price to earnings ratio, but there's other metrics that I'm not quite sure that you're taking into consideration. I think you just got to look at it full picture, because a growth company, I think you have to look at it a bit different.